I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers Podcast Show, and today is November 2nd.
And we will be going over the interest rate update along with a viewer's loan estimate that was sent to us a few days ago.
That's right. If you're new to the channel, be sure to subscribe, comment, and like. This is a good example. We have a borrower, a viewer.
Maybe a future borrower.
Yeah.
Maybe.
A viewer asked us to review their loan estimate, and that's what we're going to do right now. We're also going to get on those rates, like Tom said. But if you have a loan estimate you want us to review, be sure to email those to us at team@azmortgagebrothers.com.
Right. And this is a viewer. This is a real borrower. This borrower actually happens to be in a different state. But this was a real live situation. She was in process. As you can see here, we'll go over. This is probably a week old from the time that we got it. It's about a week and a half old now. But so very real, and let's go through it.
That's right. So this borrower is closing their loan. It looks like it's about November 7th. The loan estimate is, again, it's a 3-page document, and this is the first page, okay? And you can see where it says a couple of things we wanted to highlight. This happens to be a VA loan. So it's a VA loan. It shows here where the rate is locked. It actually shows that it's not locked. That viewer did mention that after she sent it to me, it was locked by the lender, and it was locked at 6.375 here. But what she was really wondering about are these costs down here.
And these costs down here, some of our viewers may be like, whoa, how can the loan amount be higher than the sales price?
Yes.
Well, that's because this is a VA loan, and it's a zero-down program that actually has a funding fee, which we'll get into in the next page. But if you're looking at that thinking something's off, don't worry. It is unique.
Yeah, up here you'll see that loan amount or the sales price of $400,000, and here's that loan amount. So let's look into the closing costs. Now, Tom and I have mentioned this before. If you follow this channel, we will show you that there's two numbers. There's the closing costs that are like the fixed costs to get the loan done. But then there's also the prepaid taxes and insurance.
Yeah, which we call funds. We're trying to figure out like a good name for it. It's cash to close. They're funds to close, but they're not costs because you're actually paying that into your escrow account. So those two together, closing costs and your escrow account, make up the estimated closing costs.
So that total of those two together are $28,000. Now, the important thing is going to page 2. The interest rate is actually a fine rate. The rate that rate today is the market rate for today for a VA loan. All right, and we're going to be showing you where rates are today. But what we did notice is that this lender is charging almost 1 point. This $3,700 right there is the extra fees that the bank is charging to do the loan.
Right. And when we say 1 point, it literally is 1 point equals 1%. So 1% of that loan amount would have been, $4,000. What is that? 100 and blank dollars.
Yeah.
So just a little bit less than 1% at 37.17 in points.
Yeah. So that you take this number, the 0.897, multiply that by the loan amount, and that gives you that number right there. That's really the one thing I wanted to there's two things. So it's this and the points that we want to point out. And then
what's up with this funding fee?
This VA funding fee.
What kind of a fee is that?
This big old number, $14,400. That's the funding fee. It's a part of the VA loan. Yeah. If a veteran is a disabled veteran and they're qualified for no funding fee, there would be $0 here. But a lot of veterans will see a funding fee on their loan estimate.
Yeah, so FHA and VA, again, not all VA borrowers pay this, but it's a funding fee that allows the VA to do what they do, which is basically offer zero down programs. So it's huge. It is a fee, but again, it allows you to put 0% down, and sometimes keeping that money in your bank is priceless.
That's right. So everything looks in order here with the appraisal and the credit report fee, the title fees. These are something really from one title company to another.
Yeah, they could vary a few dollars. They could vary, $100 or so, or maybe even a little bit more. But again, there's so many title companies out there, and they're all competing for business. They're all pretty much in the same camp.
Yeah. So there's really, no issues here that I can see. I mean, there's, okay, in every state's going to have different, fees and stuff like that, and different property types. And on the right here, this is this is important to look at, but it's not your cost. These are your prepaid taxes, your prepaid homeowners insurance and interest and such on. But again, not something really important.
Right. And these aren't taxes that you're actually paying to the lender, that you're paying to the government. These are going to be real estate taxes that your municipality or whatever, area that your home is in needs in order to function, with schools and roads and things like that. So real estate taxes are part of all your escrow accounts. Your homeowner's insurance in case it burns or floods is a part of it. And prepaid interest. Oh, that's where the lender makes the money. Yeah. No, prepaid interest is only charged because you typically are skipping 1 month payment. And since you make a payment every month, since you're skipping one, we have to collect that interest at close.
Yeah. So that is what we wanted to show. Again, is the loan is this a good deal or not? The interest rate is fine at 6.375 today, but this extra cost of that $3,700, that's basically an extra fee that you would not have to pay if you go to some other like mortgage brokers and whatnot. But you're going to have banks. Some banks are going to charge $10,000 for that rate. But anyway, I would grade this as maybe a fair deal, not too bad, but there is extra cost.
We've seen a lot worse. We could have done better, but we've seen a lot worse out there. So this is not a bad or terrible loan estimate. Okay.
So where are interest rates today? November 2nd, we see a 30-year fix at 6.75% and the 15-year fix at 6.75%. That's a mistake.
Okay, I was going to say, the 15-year usually is not the 30 years, so you definitely not want to do that, but that is a mistake.
This is actually going to be 6.125 for the 15-year fix.
Okay, so we did that actually on purpose too, just so you guys know, this is a real live show that we do, okay? All right, the 30-year FHA, 6.375, the 30-year VA, 6.375.
Yep, so that's the rate, and again, like we were saying with that loan estimate, there are no points, no extra fees for those rates based off of conventional FHA and VA loan factors here.
Yep, and these are real, scenarios. These are not 1% hypotheticals that no one will ever hit. These are real scenarios, which is why we price the way that we do, or this scenario is priced the way that it is.
So if you're in the middle of a home purchase or a refinance and you want us to review that loan estimate, send it over to us. We'd be happy to review it. And again, it's team@azmortgagebrothers.com. That's a good email to send it to. Hey, check out this awesome calculator that we created for you to use. If you look in the description of this video, you're going to see a Google Sheet link. You can click on that link, then go to File, make a copy, and it's
And then it's yours to keep.
It's yours.
So you're out there, you're looking for homes. You may have seen calculators, but this is the calculator of all calculators. It's like it just has a little extra oomph. It's got it all in there. It talks about payments and funds to close and income to qualify. Anything in yellow, you can adjust. So let's go over a couple of those things.
Estimate the interest rate. It doesn't have to be perfect. If you don't know it, you can just estimate your credit score, put that in there. The non-mortgage debt, your monthly non-mortgage debt, car payments, student loans, etc.
Anything that you think would show up on your credit report.
Because this calculator can calculate not only your payments and how much the funds to close, but it'll also estimate what your income will need to be to qualify.
Right.
And this is a fantastic, very thorough calculator. So go through the sales price, put in what you estimate your sales price, the term of the loan, taxes, homeowners insurance, HOA.
And I will jump in. The closing costs and prepaids are really hard to figure out. So either use whatever number we have in here or just call us and we can give you a good number. You can find out everything else. It's just those numbers are going to be hard.
Put in the down payment options you want to look at. Then you'll see this sheet. It'll give you the breakdown of everything from their payments, the income needed to qualify, cash to close. And this is a grid format, but you can also scroll down here and see these nice bar charts breaking down those payments.
Yep. And this payment is so good. It actually has the HOA payment in there, but the reality is the HOA payment will not be part of your mortgage. So just know that we are including it in here so you can see your total budget, but it would not be a part of your mortgage payment every month.
And then you can see your down payment options and how those income requirements look on this bar chart.
That's right. And if you don't make this, go to your employer and get a raise.
Oh, yes. So be sure to take a look at that link. Make sure to make a copy for yourself and ask us if we can help you in any way.
All right. Thank you, folks.
Thank you for watching the Mortgage Brothers podcast. If you have any questions, email us at team@azmortgagebrothers.com. And if you like this content, be sure to like, comment, and subscribe to the Mortgage Brothers team.